Hey there, how's it going? Hey, wanted to give a quick update on my two portfolios and my Robinhood and my Charles Schwab account. Had a little bit of rotation in some different stocks. Kind of some ones I wish I wouldn't be in, but I'm going to try to rotate out of them actually. Actually, I might have already covered some of them on my last video, but um, this balance here is not quite right. These are the stocks I own. I do have about $8,500 in margin with Robinhood, so obviously my account totals, this would be just the stocks I own plus the margin. So if you minus the margin, it'd be about $8,500 less than what I have here. And I'm looking to pay that margin down here slowly. But real quick here, my income levels dropped just because I rotated out of some of my high dividend stocks that are really kind of just really risky. And one of them was CenturyLink. I've owned CenturyLink before, and it dropped its dividend on me, and it dropped in half almost the price of the stock. And I didn't want to be in there again. And I just have a feeling that their dividend is going to drop. Plus, they changed their options to go to a monthly option rather than a weekly option. And really, that's one of the big reasons I own CenturyLink is for those weekly options. And so I rotated out of CenturyLink, which is now Lumen Technologies, I believe. But real quick here, so that's dropped some of my income level down. And I also dropped my dividend percentage down a little bit, which I think is, I don't see it here. Oh, it's over there, far right corner, 5.67. So real quick here, I'm going to go over some of the stocks I own and or all the stocks I own actually. So I have 37 different stocks I currently own. If I'm looking to rotate out, we'll talk about that here in a second. Geo, this is a REIT, I believe, and actually, I wish I never would have gotten Geo. It's really dropped since I've owned it. I have sold calls on it, but it just keeps dropping. Look at the 25% down on Geo. Um, you know, this is another one of those stocks where you kind of do, you got to do your homework on, and obviously, I did not do it here. Um, But I have collect dividends on it, and I have sold calls on Geo, and I probably would not be looking to buy another position of Geo. Hopefully, eventually, I'll rotate out of that. If not, I'll just hold my one position and sell my monthly options on those. Starwood Capital. Starwood's had a pretty good gain lately. Pays a really good dividend, obviously. I'm starting with the highest dividends first. It's obviously a risky stock. I wouldn't say it's high risk, but it's definitely a higher risk as far as it's a REIT, obviously. Um, and so yeah, and so okay, here's another reason why my dividend percentage is down. ET, yep, they dropped their dividend down, which everybody saw coming, and it was kind of priced in, but still paying 11% dividend, and I own 1,000 shares still. And I am selling calls on that occasionally. It's really hard to do. It is a weekly option stock, but I really don't like to sell the one position up. I like to sell two variations at least. And it's really kind of hard to do with ET. And once I see it, I usually sell it. I'll collect a $5 to $10 per position income off of it. Doesn't happen that often. Down on ET, I don't want to really sell it. I have collected a lot of dividends on it, and I have collected a lot of premium off of it. But I'll collect $25 here and there, and I'm not afraid to grind. I'm a grinder anyway, so I'll just grind out some profit out of it, and hopefully it'll bounce up here. And I'd like to buy more, but just because of the low price, but I think I'd rather put it somewhere else if I'm going to put it into energy than the ET. Aries Capital, I have one position. I've had this position now for about, I don't know, 6 months, and it pays a very good dividend. And it's a monthly option stock. I haven't really sold that many options on it, maybe a few. And the reason why is because I don't really like to sell right close to, again, I want to be two variations away. And sometimes the two variations away just doesn't pay anything. So usually wait for a really good day or a really good run on it, and then you try to sell it towards hopefully the end of the day you hit the right day. You just kind of gotta get lucky, I guess, to sell a an option on Aries. Hercules, it's kind of real similar to Aries. I own 2 positions. Very good dividend, obviously 10.31, and those are the dividend safety scores on the right there. Let's see here. I own 2 positions, and again, now they're monthly option stock. AG&C is a weekly option stock. I own 2 positions, and obviously it's 9.94. Excuse me. AG&C has dropped its dividend in the past year or so, and I own 2 positions of it. I do sell weekly options on it. So EPD, I own 5 positions. This EPD might be one I'm going to add another position on in the near future. It's definitely on my radar. I'd like to buy it while it's still down here at these lower levels. But I do have, 5 positions is quite a bit, I think, for my portfolio. So I'm just collecting those dividends and selling those weekly options. Usually it's a bi-weekly, a lot of times with these lower price stocks. PAA, I own 3 positions on. Plains All American. And obviously it's a high dividend stock. And it pays obviously a 9.67 dividend. And it is a weekly option stock. Exxon, I had 2 positions of Exxon. I don't know what were the last video I did, but then I sold out of it, and I think I bought another position of Coke. That's one of the reasons why my dividend percentage dropped down. Exxon, I'm probably just going to hold this one position I have. I'm obviously way down on it, but I am collecting the premiums on it, and I am collecting dividends on it. So I'll probably just hold my 1 position of Exxon. Altair Group, this is definitely one I've added to in the last month. I have 3 positions of it. It's obviously a very good dividend. MO is the stock symbol. Almost over 8.5%, and it's obviously a large percentage of my account with 6.5%. Kinder Morgan, so one I also might buy another position on. While it's down here at these lower levels. 8% dividend. It's got a decent dividend safety score of 61. Let's see here. Yeah, so it is a weekly option stock as well. And so again, I usually sell the 2 weeks on that. Actually, I've gone a lot to selling the 2-week options, almost all positions. And the reason why is I could buy it back quite often. So like if the market drops and I sell that 2-week option and collect that $50 for that 2-week option, and then I can buy it back for under 10 cents, for under $10 a few days later if the stock drops, and then I wait for an update, and then I resell that position again and sell it. So I could sell it twice in the same week, and I have. And so I've really gone away from just selling the 1-week option to selling the 2-week option, or maybe even the 2-week 1 day, or the 1 week 4 days, like on a Monday. I would sell it for not that Friday, but the following Friday. So it'd be 9 days of trading. And so I really try to stay above 80% if I can in my percentage of max profit. And it will say that on Robinhood. It will say, if you look at the sell on your premium, it will tell you what the percentage of max profit is. So I really try to stay at 80 to 85 if I really can. If not, it's usually high 70s, I would say. I really don't like to get in the low 70s at all. PBA, I still have 1 position. I've had this now for probably, I don't know, almost a year. 8% dividend, very good safety score, a monthly option stock, which I rarely sell options on because it's too far away from, it's got large gaps in the option. It's kind of hard to do. Maine is a monthly option stock. You can sell options on it. I think I have once. And it's obviously, I got this at a lower price back in the downturn in March, and it pays almost 8%, and it pays around $20.50 per month for my 1 position. So if you want to know what you'd get for 1 position, it's about $20.50 per month. And then it's kind of going up at times, and then it goes back down below 30, goes up to 31, 32, then drops below 30. So it's kind of moves in that little box, but you never know when it's going to run up. AT&T, a weekly option stock. The options have been pretty bad lately. Um, let's see, it obviously pays a very good dividend. I have a hard time selling options on it at times just because they're so low that I just don't think it's worth the risk of putting an option on there. But I am for position. It is a weekly option stock, and you're probably going to have to sell at least the 2 weeks to get any type of decent premium. Redwood Trust, it's a monthly option stock with a 6.5% dividend almost, and I own 2 positions. Vodafone, 1 position. This is one I'm definitely looking to add some more positions to in the future when it drops back down. It's had a run up here the last week or so, along with everything else, pretty much. I own 1 position, and it's 6.5% roughly, and it is a weekly option stock, but you probably were going to have to sell the 2 weeks to get any type of decent premium. Navient Corp, Navi, I own 1 position. This has run up a little bit, 6.5%. It's a financial stock, obviously, and it's had a good gain for me. It is a monthly option stock, and I believe I did sell those monthly options. Dow is one of the stocks I re-added to my portfolio, I think last month, and it's a weekly option stock, and a very good weekly option stock. This stock just moves around a lot. It's just crazy how much it just kind of bumps, 10% in a week, and then jumps back down 10%, back up 10%. It's all over the place. But it pays a very good dividend, 5.37. And the key is probably get it while it's on the downside, because it's probably going to go back up. So I'm probably looking to add a position at Dow because I love the premiums. Obviously, I love the dividend, and so that's where I'm at with Dow. First Horizon Northern National, my bad, financial stock, and it's a it's a good weekly option stock. My bad, it's a monthly option stock. I own 2 positions. It's a 5.15% dividend. It's got a borderline 44 safety score, and again, it's a monthly option stock, and I do sell those. Kraft Heinz, yeah, I really loaded up on Kraft, probably a little too much. It's 6.8%, almost 7% of my portfolio. It's obviously a very good dividend, 5.11. It's got decent option premiums, and so I probably are going to keep my Kraft and just add to everything else and not add any more Kraft. 4 positions is pretty much my max I really want right now on a stock, unless it's a low dollar stock like EPD or something like that. There's a reason. I have broken that, obviously, if you see these stocks here. But I'll probably just stay at 4 positions with Kraft and then add around it other stocks besides Kraft. I'm probably done buying that at that point. But again, good weekly option stock, 4 positions. Hopefully Kraft is going to make another bounce here. KeyBank's made a run up in the last week. I own 4 positions of it. I think if KeyBank came back down, I'd consider buying it again around that same price I bought it for before, around $11. It's about a 5% dividend, and it is a weekly option stock. HPE, still 1 position, almost 5%, and it is a weekly option stock, but again, it's another one you probably have to sell the 2-week option to get a decent premium. WBA, Walgreens Boots Alliance, this is a new position for me. I got it, it was down around 35, 36, and I'm not sure that cost per share is exactly right, but I believe it's below 37. And I got 1 position, and it is a good safety score, a good dividend, 4.51. Walgreens has had some I think they have a lot of debt, if I had to guess, is why the reason it's been dropping quite regularly. And so, but of course, Walgreens bumped up a lot in the last week or so, literally like 10%, and many other stocks have. Regional Financial, this is another bank stock with a 4.18 dividend score on 1 position. It is a monthly option stock. MetLife obviously is an insurance stock on 2 positions, weekly option, very good weekly options, 4% dividend, very safe, safety score. Pfizer's one I've added to, have 3 positions of Pfizer now. I got it before it ran up after the news of that they had a cure for the virus, and so I have 3 positions, almost 4% dividend, a good safety score of 75, and a good weekly option stock. This is one I'm going to rotate out of. I'm pretty sure. I'm not sure why I bought CF Industries, but it's been killing me. And so I bought it close to 34. It was down around 26. Now it's back up to 30, 55. I really didn't do my homework on it. And I've done this a few times, actually. You learn more from me by learning what not to do. And so this is exactly one of those prime examples of that. CF, I just didn't really understand this company very much, and I still hold the stock. Went to get close up to where I break even at, and I'll tell you what stocks I'm looking at buying, but it pays almost a 4% dividend, 45 dividend score. It does have decent premiums. U.S. Bank, 1 position. One thing, a U.S. Bank, I would look at adding another position if it dropped down below 40. But right now I have 1 position. It's good weekly option stock, pays a 3.85 dividend. Cisco, 2 positions. It's a good weekly option stock. It's very solid dividend at 3.65. Very strong safety score at 91. And again, I own 2 positions. HPQ still own 1 position of this. Owned it for quite a while, at least 6 months or so. 74 dividend score, 3.63 dividend, and it is a weekly option stock. But again, you probably have to sell the biweekly or the 2-weekly option. UGI is a utility stock at 1 position. I've had this for quite a while, probably just less than a year. Very high dividend score, 3.61. It is a monthly option stock. And what I did with this is that when it bumped above 35, I sold the 40 for the month of November 20th ending. And looks like I probably won't get there. It was around 35 when I sold it. And it has a few good days in a row. It's a good time to sell an option, and that's what I did there. I collected a little bit of premium there. I think it was like $20, $25. And then obviously I get the dividend off that. AIG, still in 2 positions of AIG, 3.43 dividend score. And I've had AIG a couple times now, and I'm back on it with 2 positions. Viacom, I've had these all the way since Viacom was at $18 back in March. Let's see, it's very good weekly option stock. I have 4 positions, and I probably am going to hold my 4 positions and just keep trying to sell those weekly options. And usually, again, I'm selling a lot of the 2-week options, and the reason why is collect those bigger premiums. And when that stock drops a couple days later, I buy back that option at under 10 cents, under $10 total. Then I try to sell it the next day and collect that $50 premium again. It's grinding, but I could easily, if you have enough positions, you can easily make a good weekly little income off of doing it. And so, and I'm not afraid to grind, and so that's what I do. Coke, still 2 positions. Definitely Coke would be one I'm looking to add to if it drops below 50 again. It's got a 3.06 dividend and an 80 safety score. I'd like to get up to 4 positions of Coke. Would be great for me. But yeah, I really do like Coca-Cola, and it has very good premiums. Hartford Financial, this is another insurance stock. Added, I think, last month. It's made a big run up here in the last week, just like most of the insurance stocks have. I own 1 position, weekly premium stock with a 2.88. And then eBay, this is another one I wish I would have thought well through before I bought it. $54 about a month ago. It does have a 1.34 dividend. It does have a nice safety score of 70. I'm going to definitely probably rotate this out of this eBay. Really, honestly, it's one of those mistakes I made. I want to be a dividend investor, and I thought there that eBay might have a chance to coming into the holidays. eBay might have a chance to catch on fire, but for some reason this stock just never really goes anywhere. And I think eBay could be in Amazon. If they learn to just do their own fulfillment and are worked with other companies for fulfillment, and they may not be as big as Amazon. They used to be bigger than Amazon, but they may not be able to be as big as Amazon again, but they could be a very good growth stock if they just looked at it. They have the name brand, they have the customer base, they have everything. They just don't ever change gears. And if they did their own fulfillment, and bought just like Amazon does, they'd have to do it. They'd have to find their own way of doing it. Amazon has a whole massive distribution centers, things like that. eBay probably wouldn't be able to do that, but they could find a way to do something similar by partnering with somebody. But I think I'm just going to rotate out of eBay, and I'll talk about the stocks here I'm looking to buy. Coke was one of them. Dow was another. And Oracle is on my list, and Seagate Technologies. All four of those are stocks I'm looking to buy. I'd probably rotate out of this eBay stock when it gets back into the 50s, and wait for one of those to probably drop down closer to the same price this eBay stock would be, and probably going to rotate over that. So those are my four I'm looking at: as Oracle, Dow, again Seagate, and Coca-Cola. Those are the four stocks I'm looking to rotate out of. And probably CF is going to be one of the stocks I'm going to rotate out of, as well as eBay. And then I'm obviously add cash every day almost. And so EVRI, bought this around $7. This is just a trade. This isn't necessarily a buy and hold stock. I did sell the option all the way up till March for $12.50. And so we'll see if it keeps growing and growing and growing. I had great growth with it so far. If it keeps growing, I'm probably going to roll it over again and see if I can get some more money out of it. But yeah, so right now I'm still at 81 positions. I think I've been at 81 positions for about 3 or 4 months. But I will say I have higher dollar positions and probably closer to where I want to be besides eBay and CF. And, real quick, go through those real fast again. Geo, Starwood, ET, Ares Capital, Hercules, HTGC, AG&C, EPD, PAA, Plains America, Exxon, Ulterior Group, MO, Kinder Morgan, KMI, PBA, Permia Pipeline, Main Street Capital, MAN, AT&T, Redwood Trust, Vodafone, Navient Corporation, Dow Chemical, which is Dow, FHN, First Horizon National's Action Insurance stock. That's why it jumped up so much. So I was trying to figure out why all the insurance companies dropped when they came up with a cure to the epidemic, because they, people's life, life insurance makes sense that there's less risk for them now. Kraft Heinz, Key, HPE, Walgreens Boots Alliance, Regional Finance, MetLife, Pfizer, CF, trying to get out of that, USB, US Bancorp, Cisco, HPQ, UGI, AIG, Viacom, Coca-Cola, Hartford Financial, eBay, and EVRI. I like to really go over my stocks because I know when I watch videos, I'm trying to find out stocks. And so I really like to go through those so people know what I own and know why I own it. And so if that clicks with you and that's something that works in your portfolio, maybe it's a name you haven't thought of. And so there's so many stocks out there. So you kind of see the dividend, what they're paying, and you get the names and what the stock values are. And so hopefully it's some information that might help you out a little bit. If you like the video, just hit the thumbs up. I appreciate it. Have a good day.